Good morning, everybody. Welcome to the Flow Show. Finally got through to Friday. What a week it's been, eh? All good fun, lots of volatility, lots of trading to be done. Hopefully you've all made some decent money this week and suffered no mishaps along the way. If you have, I'm sorry about that. Part of trading. I hope it hasn't damaged you too much. And, always get back on the saddle and go again. So, morning, Kay. You're back from your little jaunt to Bath. Congratulations to you and your family and your son for his graduation again. Looked like you had a good time.
Yeah, very good, very good time. Yeah, thank you. Yeah, it was a very nice few days.
You got 2 pieces out.
It looks as if have I jinked also this market by being off. When I left, it was like relatively quiet, and then all of a sudden, Armageddon came around, and everything got absolutely how shall I say, smashed, or everybody wanted to get out of everything at the same time.
Yeah, it's either you or it's me. I find whenever I'm going on holiday, the week before is always an absolutely stonking week. It's either busy or lots going on or something happens. So, yeah, I think maybe a bit of both. We both jinxed it. Always tends to make me work hard when I'm just about to take some time off. But that's what we look forward to in markets, and there's been plenty of moves, and stuff seems to have come back a little bit, but we'll talk about all those moves in a moment. Right, let's get stuck in. PBOC, after the wobbles that we had over there as well in dollar China, a big spanking there. They fixed slightly under 713 at 712 at 70, so just a minor move down, more likely in line with what we've seen in the price moves rather than anything else. Over in Tokyo, we had some data out, the Tokyo CPI, which we got a lot of eyeballs on, particularly coming with next week's Bank of Japan as well. So, bit of a funny one. Core CPI came in higher by a pip. The headline CPI came in lower than expected and lower than last month, so a little bit softer. Out of some of the other measures, the core, the ex-fresh food and energy came in down at 1.5%. Was expected to come in at 1.6, which was down from the prior 1.8, so that came in even softer. So don't think it moves the needle that much, but it will certainly probably get the dovish members of the BOJ maybe talking about staying on hold for a little bit longer until they feel that inflation is really firmly entrenched around their target level. This is only the Tokyo CPI, not the national CPI, but it comes out before the national number. So a lot of emphasis is put on this as well. What do you make of those numbers, Kay? Does it change anything for next week?
No, I don't think so. I don't think so. I think their plan is all well. I mean, apart from perhaps tweaking at the Bank of Japan meeting with those numbers about the reduced bond buying, I think they have a pretty firm idea themselves about what they are going to do with the rates, and I don't think these numbers are going to change much. They're not on a preset path, but this confirms that they can go probably because we're still above 2%. So this is encouraging for them. As you say, it's not the national number, but Tokyo is 25-30% of Japan's economy. So that is a big chunk of what the Bank of Japan will be looking at.
Yeah, very much so. So, I mean, as we sit here now, and given the various sources pieces we've had out this week and last week, it does look like it's finally balanced. You've got those on the BOJ who say that they don't want to leave hiking too late and that they've got the conditions to do so now. You've got some who are saying that they want to take a bit more cautious approach. They want to see things like consumer spending, consumption picking up and being a bit more solid as well. So I think given, as I say, the sources, it's pretty much a coin toss for this meeting, whether they're going to do something or not do something. So that makes it a binary event as far as price moves go. And then if they do hike, we've still got the question, how much do they hike by? 10 pips, 15 pips, 20 pips, 25 pips? That's another element that we won't, that's a bit of a price risk, shall we say, for the details of the meeting.
Yeah, I don't think that how shall I say? It's going to take a big move to really do the next leg up, perhaps in the yen. And well, and even so, I mean, it could be that the market won't need too much to go for another round of yen strength, but will it last is always the question. There's been a big liquidation while I was off, and already starting last week, really. Big liquidation of everything yen related. We've seen it having spillover effects on other stuff such as China and what else not. Now we are here. I think it's going to be important how much they do the bond reduction by. It's very hard to see the Bank of Japan do 25 BPs. It's hard to see them because that would send like a really big signal. Now, if they really want to curb the yen strength, we know about the relative independence that the Bank of Japan has versus other central banks, perhaps. They could send a really strong signal and do 25 BPs, but that would be a bit of a shock in this right now. I reckon they don't have the habit of going in such big increments. So, but on the other hand, it's enough now, and after what we've seen this week, it's enough to keep the market on its toes. So. Where I expected to be, and I said it on Monday on the face as well before leaving, I was expecting a bit of a range with rally sellers in all things yen. The sellers came in, but the range broke very easily. It's going to take something to bring us back to the prior highs. So yeah, I think again I'm going to call another range for a bit, especially after those US data, but. I don't see them do a lot on the rate side, and perhaps the market is going to focus a bit more on what they do on the bond side.
Yeah, I think so too. I think probably we're going to get some people in the market who are going to be talking about the MOF floating in the background next week, just in case they decide they want to give yen pairs another nudge in the back. So I think that's something that we also need to prepare for. But we've got plenty of time before we get to that meeting next week. And speaking of the MOF, we've had Kanda speaking at the G20 shindig, saying that excess currency volatility gives negative impacts on the economy. They've also said the MOF, this is a sources piece, saying that they want the BOJ to consider bank capacity when decided on their bond plan, and they want the BOJ to cut bond purchases gradually. So that's all going to play into those factors there. I was actually talking in various places yesterday that given the volatility we've had on the downside, particularly yesterday in the yen, it's almost a volatility that they don't like, and they might come in and start talking the other way about intervening when they're seeing 200-300 pip drops a day.
That would be a bit much to ask right
now.
Yeah,
it was said tongue in cheek, but there is a serious comment behind it, because as much as they would like this going their way, they don't want to see it happening in a disorderly manner, because that just creates problems on the other side. So although they've been suffering from weakness for so long and they'd like to see some strength, they equally won't want it volatile in those moves either, because otherwise it just gets Japanese companies all hot under the collar. 1 minute it's the exporters, next minute it's the importers. So wouldn't be surprised if they kept the volatility message in their correspondence to us, shall we say. Right, a bit more data coming into this morning. Is it on there? No, it's not on there. Of course not. We had some Swiss jobs data, unemployment data out. Headline unemployment rose quite a chunk to 9.4 versus a quiet 8.7.
No, I think they misreported that. It's the Swedish that
Oh,
unemployment
is it?
came out.
Oh, then so we
Yeah,
didn't get the Swiss
it's
one.
been
That'll
misreported.
be it then. That'll be it then.
The
Okay, so that
Swiss unemployment rate, that would be a joke because that thing is turning around 2.3, 2.4%.
that's what I was thinking. I thought that's not right. So someone's misreported that. Oh, okay. Anyway, so it's a Swedish one, right? Move on. Forget that one. There was so little to pick up today. I'm just trying to pick anything I can. Right, we'll move on to some ECB bods. Bank of Portugal Deputy Head Raposo says that the ECB may cut rates 2 more times this year. Nagel was out, Germany's Nagel, saying the ECB should be able to cut if the data stays on course. You got a bit of a let off last week, mate, with the ECB bods after the ECB meeting. They've all cleared off on holiday, so those guys have been few and far apart, shall we say. They've been very quiet. It's the holiday season. I don't know what time when EU Parliament is closing down. It must be this week or next week, I think,
Yeah,
I don't know.
probably the end of the month, which is next week. I'd say it's been already relatively quiet, and also they're all going to be in Paris for the Olympics. So I'm not sure whether we're going to hear a lot about those guys.
Yeah, exactly.
It's a mess, by the way.
The rest, the Fed and the BOE are all on their lockdown period, so we won't be hearing from them, thankfully. Right, let's look at some of the data that we got out yesterday. Start with the easy stuff. Jobless claims, nothing to see there. Continuing claims staying pretty steady. The headline jobless claims numbers coming down a little bit from what we saw last week. There's obviously some of this talk about the hurricane impact last week, but it doesn't really matter. We're staying in the 200s, 230s, 250s, that sort of thing. So nothing to see there. We did get durable goods orders, which on the face of it, the headline number coming in minus 6.6 looks like it's pretty bad. However, when you look at some of the other measures, you take out transport, defence and core goods, looks okay. So this one here, this is like a core goods number that came in up 1.0%, so beating expectations. Now, this big minus 6.6% was largely in part to a 127.2% drop in non-defence aircraft and parts orders. This is something that can throw around these durable goods numbers a lot because they are obviously big orders, big ticket items, as they're called, so it can create a lot of volatility. But for the consumer side of things, that was a decent number at 1%. And I look through the numbers, things like white goods, other sort of items on the consumer side were all positive. So no worries to be taken from this number here. US GDP came out beating expectations. Again, market or people trying to get all recessionary and looking at in curve inversions and trying to predict the end of the US economy. Well, they're going to have to wait a bit longer because we got a nice big jump to 2.8% versus 2% expected. A lot of focus on the PCE measures as well, because obviously everyone wants to know what's going on with inflation, and we've got the June PCE data today, so that would have been estimated in all these numbers. So PCE, that came in much softer, 2.3%. Remember, these are quarterly numbers versus 2.6 expected, down from the 3.1%. So that was quite a significant drop. The core number, that came down from 3.7%. Where was it? There we go. It was expected to come down to 2.7, but it came in at 2.9. So a little bit warmer than expected, but that's still quite a decent drop. That's going to have the market perhaps looking for a softish number from today's PCE just to line up with that. So we'll have to see what that is, and we'll just take a quick look at the expectations. So these expectations have PCE coming in at 2.5, down a pip. Core at 2.5, down a pip. So we should maybe just expect these to perhaps come in a little bit softer. I don't know how they calculate monthly numbers into annualized quarter-on-quarter numbers and all that palaver, but given those numbers in the GDP, maybe we should be looking for a slightly softer number on these June numbers, but don't hold me to account for that if it's not. The data will be what the data is. We don't have any Fed heads out, but we've had some former Fed heads out. And Tuesday or Wednesday, Dudley was out pumping a July cut from the Fed. He was out again yesterday. Bullard came out the other way saying that the Fed should be preparing for September. Now, you have to know two things. Firstly, former anybody's don't mean much at all. Okay, they're all fine and dandy talking in big terms, like big shots. When they're not in the seat, it's a different kettle of fish. When they are in the seat, you wouldn't get comments like that in the main from some people when they're actually in a Fed position. Secondly, Dudley's comments did move the market, got the market ramping up July expectations, but he is a Bloomberg columnist, and it was Bloomberg pumping him all around the wires for pretty much most of the last 2 days. So you have to take that into account. But overall, these guys have no input on what the Fed's going to do next week, but they can bring price moves. So you have to watch what happens, but also maybe look through what they're saying in terms of what we actually know the Fed might do. Macklem was out as well after the BOC on Wednesday. He said that the central bank's balance of worries is shifting, and the worry is now inflation falling too far. So that's a fairly dovish comment. That keeps them on the cutting path, as we saw from the BOC on Wednesday, that they're happy and likely to cut again if inflation keeps going and they're nowhere near limits with Fed divergence. So that's going to be the path for the BOC, it seems. Some early polls have been out around Harris, who took over from Biden. And these two polls are saying that she's doing better than Biden has been doing against Trump. Trump is still largely in the lead, but she's polling better than Biden did versus Trump. So that's something that we might have to keep an eye on. Obviously, polls, there's going to be tons of polls. So we always take those with a pinch of salt. Kate, I know you're just back, but any thing you want to bring to our attention?
What I noticed on Harris is that she's getting more and more heavyweights behind her, right? So the uncertainty surrounding how many more candidates could come up on the Democrat side, it seems to wane a bit, and it does look as if she is really going to be the front runner, right? So we were wondering about those other candidates, but looking at the names of the people getting behind her, it does look more and more that we are going to have to focus on her for the Trump fight, right? And that's going to be important as well, I think, because it's going to take a bit of uncertainty away from the markets, and we are going to have a bit of a clearer idea on the continuity of the Democrats' plans and programs, and maybe that's going to start to, well, after the summer lull or the August or so, that's going to start to probably direct market moves a little bit and make the polls actually perhaps even more interesting, right? When you have a clear-cut candidate.
Yeah, very much so. She seems to have been backed by the majority of delegates. I think it's the delegates that have the final say. I don't know how it all works, but it does look like she's going to be the one going forward. So I don't know if anyone does pop up. We'll have to wait to see. I don't know the full ins and outs on how it works over there. I struggle with how things work over here, let alone you Yanks over there. But we'll have to wait and see. Right, let's get stuck into some pricing then. Yeah, Gavin saying, considering the move already now in the yen this week and last, even if they do hike, wonder what the effect will have now. Yes, that's a good question. I think if they hike, it's going to be the size of the hike. I think if they don't do anything, there'll be a natural weakening of the yen. Hence why we probably should bear in mind, just keep in the back of our minds, that the MOF might be lurking if that moves quite strong. Given how we've moved nearly 1,000 pips in the last 2 weeks, I have no idea where we're going to be next week going into the meeting. So it's a bit folly picking levels at the moment in terms of where we might be by next week. So you just have to take it. Sorry?
Stick your neck out. I'm saying we are trading 155 on the head going into the BOJ.
Okay, I'll stick my neck out. I reckon we'll be trading between 140 and 160. There we go.
All right. Oh, that's tight.
So give you a nice range. I'll be bid at the bottom and offered at the top, and you can do what you like in the middle. So yeah, you probably just need to play it wherever the yen is at the time. Just play it on the back of what it means. If they don't do anything, if they don't hike, but they cut bonds, that's sort of maybe a bit of a neutral price move. If they do both, if they hike and cut bonds, that might see a little bit of yen strength. If they don't do anything at all, we're going to see the yen weaken. To what degree, no idea. Probably if it's both none, no hike, no change in bonds, then that's probably going to be the bigger reaction for weakening. And then, as I say, watch out for the MOF perhaps lurking. So yeah, whatever happens between now and then, we don't know. But when it gets to the meeting, you'll know the balance of risks either way. Might as well stick on dollar yen. Now I mentioned this yesterday that this pattern that we've got going on. If you want to try catching knives, you need to understand what the price is doing. It was making a low, breaking a low, bouncing back to the former low, breaking the new low, bouncing back, breaking. It was that pattern all the way down, and we needed to see that pattern stop, and it started to stop. And it started to stop, obviously, around a big level that we've been pointing out for weeks now. Huge level on the way up, huge level on the way down, and here we are again testing it. So the pattern has broken. Okay, this pattern has broken. Does it mean we're going all the way back up to 160? No idea. What it needs to do now is just get it back above all these little levels that we had and that formed partially on the way down. So this 154, we've had a little poke above to sort of 40s, but we can't get and hold above this sort of 20-30 area. So this developed on the way down and it's developing on the way up. So that's where we need to get back above. 155 did nothing on the way down, held for veritable 5 minutes, then we carved through it, but straight after became resistance. So that's going to be a level on the way back up as well. Bear in mind the volatility. Okay, you can't take some of these levels, and guarantee them 100% that they're going to work. We've still got volatile markets. One headline, the Fed's not going to cut in September or something, and this carves through, or a headline from the BOJ. So you still need to be trading this with caution, picking your levels, being very tight, and just bearing in mind that volatility. What would be a worry is if we can't get through this area over, the course of the next few hours, or even if we can't close above there, that would keep the whole downside pressure in play. And then maybe we get another test down here, and then we see what happens at 152 again. Obviously, if we do have a test there and we get another decent hold and bounce, this is really going to solidify this levels. There's going to be stops building below if it breaks. So in that sense, if I'm long off this level still, I would consider giving it another go, depending on the price action. But if it held that time, I would be thinking about some stop reverses underneath if the level did break thereafter, because the more people that are buying off of here, the bigger the stops will get below it. Dollar CAD is one I'm still in as well. It's still, sorry, mate.
Yeah, and I would add just on the yen, look at what Japan is doing with their own currency in the next sessions. That's going to give us an idea about how they want to position as well going into the Bank of Japan. It's all good and well. There's a lot of liquidation being done in yen pairs over the past couple of weeks, but I think now going into the Bank of Japan, keep an eye on what's going on in the Asian sessions. That is going to probably tell us what they still have to do or what they don't have to do anymore as well, because we can't forget we are going into well, although it's not a big month end, but we are slowly going into the month end, and Bank of Japan is going to be right on the month end. So keep an eye on what's happening in the Japanese sessions, not only what's happening outside of Japan.
Yeah, I'm going to leave you to month end, mate. It's going to be a messy one as it is. We've had a few models out. One of them, Barclays, calling for moderate to dollar yen buying at month end. Well, how they're going to sift that out of all these moves in the last 2 weeks? Good luck to them. So you won't catch me listening to the end of month models this month. As I was saying, dollar CAD, yeah, this one's playing nicely. I'm still short a bit, short into the big figure, short up at 138.40. It's held pretty much. It did nick above it, but it held the April high. So it's keeping me in the game, shall we say. 138, we did have a knock through yesterday when we had all the volatility going on, but it's holding right now. So that's keeping this whole thing in play as well. For me, it needs to get back under this 137, 70, 80 area. That was the more shorter term highs and traffic area that we had up here. So it confirmed straight after we had the break. That's the level for me now. If my shorts are going to start making some money, I need to get back below there. Otherwise, we've got a little bit of a battleground here. And if we break up, we're going to be heading towards the November high up here. Where am I? Lost it. Where am I? Here. Yes. So we've got this 138, 60, 70s. Not the November high. That's the November high up at 139. We've got this level in between at 138, 60, 70, which has gone back quite some time. As you can see, this has been another one of those levels you need to always have on your charts. So that will be the first step. After that, then we're heading to 139s, and then above there, we're going to be talking about 140s. So there's still some levels in the way that we need to chew through, but this momentum is still looking pretty strong for now. But you know your markers where the things are going to change or continue. One more euro sterling, and I'll punch it over to the Cayman. Looked like it might have been having a little go again under the 84, but it didn't quite get down to that prior low. So it's had a little step up, and now we've moved back higher. Managed to get through the 20s again, break these series of prior highs. Still a little bit of the mix. There's a lot of traffic in here that we had through the 84s. So really, I'm not going to be that bothered unless we start getting above 84, 50, 60 and head into 84, 80. Still short, still happy to stay short. I might even reload if we get a move up towards 85s just to see if we continue to play the range for that one. Obviously, the Bank of England, 1st of August, might be a bit of a mover for this one. Kay, do you want to take it for a few?
Yeah, just some quickies because I know people are looking at metals, and perhaps I'll share a few, and quickly on the cable as well. Right, gold. Okay, you have to. Yeah, it's since I've been away, I haven't cleaned up my chart yet. But look, I mean, we are now in a new little range here, and 23.5 to the downside, 23.85.90 to the top side. Okay, we've broken what some people may call a bit of a neckline, perhaps. But anyway, for me, it's now in a $40 range here. I was long, and luckily, when I was off, I did cut a few here. I was a bit too optimistic with my next offers, which were in the 24.37. But anyway, on my longs here, as I said in the room, I left some orders 24.10. I did go manually, sold a bit more, just around 24.20 here, and then got stopped on the rest through those levels. I think a bit of a range here, and then we will see where we end the week. If we can start to crawl back higher, to me, okay, there's been a lot of liquidation in quite a bit of stuff, yeah. Of course, led by the yen, which dragged a lot around, and then even with those higher US data forcing a few dollar buyers elsewhere. But this is still stabilizing, and on my longer term view, I still haven't changed. I still think we are broadly consolidating at higher levels, but whether it's going to hold 23.5 or do we need a retest of 2300, 2290, the jury is out on that one. I would say though, if we start to get back above 2390 and hold there, this whole corrective stuff could already be over, and we going back up. Does it have the strength today? Personally, I don't think so. I think we are going to range trade. The market has been, I wouldn't say traumatized, but the market has seen a lot of liquidation, as we can see on yen, but also on other metals. Silver has had a very big drop as well over the past couple of sessions or over the past week or so. So we need to be a bit careful. Here on silver, for instance, we really need to get back above 28.5 to start going again. For as long as that doesn't happen, I wouldn't rule out, if there's more liquidation to be done, even to get back down to low 26s, where I'm going to get extremely interested, barring very negative numbers in global economy. But if there would be more liquidation here, I'm really going to start to load them up again. In the meantime, we're holding in between there, 27 and 40, 27 and a quarter, 25.40, bit of a level that we saw pop up in before as well. Could be enough for this move, a bit in line with the rest. Could be enough for this move, but we can't rule it out, okay? Because the market is really a bit nervous right now. Well, we're also entering end of month, those holidays, everything. It's a period to be a bit cautious. And as Ryan already said, take into account the volatility. And there's two ways to take account volatility. There's either you keep your stops and your take profits if you see a real quick layup on a position that you have, be relatively quick to take profits, or you just reduce your size. And I'm doing a little bit of both. I don't have any decent sizes on at all right now. Seems like a bit of a team effort to have bought dollar yen close to 152 for a few of us. I did it as well when I was off, but I'm more than happy to take profits in this run up, and if I see closer to 155, I'll be gone and look at something else. In the meantime, cable. We've already spoken about it, and I trust Ryan already mentioned those levels again. Those low 128s, I think those are going to be relatively important now for the viability of the whole bounce in the cable. And if we really trace a few lines here, we can see that over time they're probably going to converge towards those levels as well. Those are going to be important levels if we visit a bit lower here. So for the time being, not having anything in it, but I'm just watching the game. Ryan, I had a quick question for you regarding sterling. I'm also still a bit short euro sterling, but do you think that there's already a bit of labor impact in what we see in the sterling, that we are correcting a bit on this euro sterling, or is this euro sterling just a result of sterling yen liquidation, for instance, or is there some uncertainty starting to filter into all things sterling due to that labor election and Reeves, for instance?
Yeah, I mean, there's a few headlines banging about that apparently there's a 20 billion black hole in the finances that the Tories created, that Labour are going to be finding out, and again telling us how bad it was and how they're going to fix it all. So that might be weighing if if there's a problem with finances. Other than that, I just think the main part of it is that the euro's just holding up a bit better than the pound at the moment. The euro, particularly in some of the crosses, euro was a euro CAD. It's really been holding up well. Even euro dollars holding up pretty firmly, while cables, had its the usual thing where it just moves a bit more than the euro. So fundamentally, there might be a bit of this Labour stuff in here, but I think it's just the others moving at different speeds.
Yeah. All right. Yeah, I'm also thinking this euro dollar is seems like there's a lot of process going on which is keeping the euro dollar virtually at a standstill, and we could argue that it's holding up relatively well as well, this euro dollar. Okay, yeah, that's true. So don't forget, still around this level, that we have this monthly 200 moving average as well in the euro sterling. That's still around 84.48, as you can see on the left there. This simple moving average. We are getting ever closer to month end, so I would say keep it in mind for when we are going to be end of next week and closing the month. See where euro sterling closes, because it may have a bit of an importance. I don't have that much other mix. We've had a spike here yesterday. This spike, it coincides with this spike that we saw in June, and not too far from those spikes higher, and we're starting to slowly dribble lower again. If there's nothing more dramatic that happens to risk, I think for the end of the week, we could slowly drift lower again. But of what I picked up over the past week or so, there seems to be a bit nervosity on the Mexican side now, with Scheinbaum not really knowing what to do, and not really knowing what to do with the US as well. So I would say if we get back down to lower 18s, I would not be surprised around these levels here to start to find buyers again. Okay, so I'm just watching those levels. They didn't show up on the feeds, but then it's emerging markets still, yeah. So we had spikes through them, and but still keep in mind 18.5. If you close the week above 18.5, then I would say this is rather bullish. All right, if we close the week above. If we close it below, then I guess a move back down to lower 18s may be on the card. And then last one to close, dollar China, big liquidation, and then I saw this liquidation happening yesterday, despite a surprise cut in China. So I missed this whole move on the way down. By the way, I was a bit long, and I stopped while I was off through 727. I just pulled up my stop just not to lose anything on my open position. So luckily, I've been done at a fairly decent rate. But there's a bit of resistance here, and it's starting to push back against it. China, as I said, I wasn't here for this liquidation. Bit of a shame, because I would have loved to load them up close to 720. But look at this spike here. That tells to me that barring this massacre here, that perhaps China is not done yet. And if we close the week back above 726.25, I would view it as actually just an accident, and perhaps we are going to come back higher. And Ryan, really, that is all for me now, mate. I'm going to give it back to you.
Thank you very much, mate. Yeah, I don't think I've got much more to add today. Been a long week. I'll be thankful when the weekend comes by. So, yeah, I think we'll call it a session for today, folks. Thank you ever so much for coming and supporting us here at the Flow Show all week. Hope we've steered you proud, and have a great weekend. Welcome back, Kay. I will see you in a week's time, everybody. Kay will be taking over the rudder for next week. So have a good one. Stay safe, and I'll see you all on my return. And,
Thanks, Ryan. Have a good holiday, mate. And we
cheers,
shall
mate.
see each other next week, viewers.
Yeah. Cheers, all.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.